lucky to have with us to share, some of these new highlights coming out of Congress and giving us a little bit more detail on that. Thank you.
Thank you so much. Okay, Jeannie, with that, we are going to close out our faces. I want everybody to know that there will be questions and answers, or you could write your questions in the Q&A or in the chat box, and we'll get to those at the end of the program. And for whomever is unable to ask questions but really would like to talk to Jeannie or contact her directly, we'll give you that email information and phone number. Okay. Okay, with that, Jeannie, thank you so much for being here. You're down.
You're welcome. Good morning or good afternoon, everybody. Jeannie McMillan with McMillan and Associates. Pam mentioned questions, and Pam, I'm assuming you're monitoring chat. So if there are questions, I'm going to split this into individuals, businesses, and then the stimulus that happened over the weekend. So if you have questions in between each segment, if that's easier, shoot those over and we'll do our best to answer those for you.
I'll be watching for that.
Okay, thank you so much. So McMillan & Associates, CPA PC. I am the owner and CPA of McMillan & Associates. I've been in business since 2004. And primarily what we do is we're a full service accounting, tax, and payroll firm. And we basically, our goal is to tailor solutions that fit you the best as individuals and your businesses, whether they're brand new or you're looking to sell or you've been, in business for, a long time. So we've got a lot of experience. I've got currently 7 staff. So here's my team. Some of you who may be on the webinar or who know me know my team. We have, like I said, 7 altogether. I have another part-timer during tax season to get us through tax season, and combined experience is well over 100 years. I've been a CPA since, basically 1982. So I've been doing this for a long time. So if you're interested in seeking out a new CPA for tax season, we'd be happy to talk to you. But getting on to what we want to talk about today and what kind of returns we do, which gives me, I feel, the experience to give you the advice that I can give you is we do every return. If someone asks you, does McMillan do that kind of return? We do everything. So hopefully our experience will be helpful to you in the presentation today. For businesses, there's of course been a lot going on this year with PPP. And so I wanted to go through PPP round 1, round 2, what's currently happening, and then address any questions you might have that Pam might see in the chat. So for PPP round 1, can I still apply? Generally, yes, you can. So if you didn't take advantage of PPP round 1 because you didn't have time, couldn't figure it out, just weren't sure if you were eligible, you can still apply. If you were in business on February 15th, 2020, if you had employees or net income from self-employment. This was one of the confusing things about the PPP round 1 with the self-employed folks is, you don't have a payroll, it's just you. And how we apply for that PPP round 1 is you use your net self-employment income. And in the same way that employers use their employee wages, multiplying average wages times 2.5, the self-employed business owner would use their net income times 2.5 to get their first round of PPP loan. So if you have not applied and you can find a lender that will help you, I know there are a lot of local banks. If you go to sba.gov, they're just going to refer you to a lender. So seek out either your local bank or, I'm sure Pam and Becky could help you with contacts there as well, but don't be afraid to apply. You have to have been a new business in or if you were a new business in 2020. I wanted to point out too that on the slide here, it talks about if you had gross receipts in second, third, and fourth quarter, if they were less than the first quarter, you can still apply. And so that would apply to someone that perhaps wasn't in business in 2019, but they still want to apply for 2020. We've got spreadsheets galore that we're helping people with in that regard, because again, they didn't know that they were eligible. PPP round 2, do I qualify? Generally, yes. If you received and have spent your PPP round 1 money, you don't necessarily have to have received the forgiveness yet, but you have to have, you need to be in the near future of applying for forgiveness, meaning they don't want to give you money for PPP round 2 if it isn't clear that you've spent round 1 money. You have to still be open. So if your business is shuttered or closed, for good, you can't apply, you can't go backwards. It has to be for a business that's currently open and operating. And then most importantly, you have to demonstrate a 25% reduction in revenue quarter over quarter. So it's any quarter. So any quarter in 2019 compared to any quarter in 2020, if you had a 25% reduction in gross revenues, you qualify, or you are eligible to be qualified and should apply. And one thing that they snuck in the application for round 2, and as I found out, a couple of bankers didn't realize this was in there either, but there's a qualification on affiliate revenues. So when you're doing this calculation for the gross revenue, 25% reduction, you have to include affiliate companies. And what that means is that if you have control or power to control that affiliate company, so let's say, you have business A and over here you have business B that houses perhaps the building that you own, and there's rent coming into that affiliate company. You have to combine those 2 affiliate companies' revenues when you're looking to qualify for that loan. So be super careful with that. If you have already applied and been granted that and didn't include that, I don't know that there's a way to correct it, but talk to your CPA or whoever is doing your taxes currently, and make sure you've got that right, because it's possible with the SBA, when they start to look at these loans, down the road, they may ask you, because they're going to be able to pull and search based on EIN numbers and socials, what your affiliate companies are. And in the event that they do, we want you to have it right and not have to pay any money back unnecessarily. I also wanted to note too, there's a 14-day moratorium on folks that have businesses with employees in excess of 20 employees, because they're allowing small employers to get in there. From what I understand, many of them were shut out because of the larger companies bombarding the system. So that 14-day period ends tomorrow at 5 o'clock Eastern Standard Time. So if you're a small employer under 20 employees, there's this window that they're allowing only those folks who have that criteria to apply. So you don't have much time, but you're busy if you qualify. Another question we often get is with the EIDL grant money, is it taxable or not? It is not taxable, but you have to reconcile it in your tax return, and your preparer should know how to do that, whether you're a corporate, individual, or a Schedule C partnership, company. They should be able to do that. And initially, also what was happening in the initial rules, the grant was not supposed to be taxable, but the banks or the SB, I'm not sure where the miscommunication was, but they're basically were throwing those grant monies out on the loan as being owed. So clients were getting forgiven for their PPP amounts, but yet they were getting a 1099 for their EIDL grant money, or the grant money was being thrown on the loan as if they had to pay it. They are now correcting those. We've had a number of clients that have gotten corrected loan balance amounts showing 0. But if you have satisfied and gotten your forgiveness on your PPP loan, but you are still sitting there with your EIDL, that initial grant money that you got, $1,000 per employee, up to 10,000. If you still have a loan balance according to your bank, you need to talk to them about getting that removed and how you go about that, because it should not be there. If you met all the other qualifications for the forgiveness, that should be gone as well. Businesses, this may be the first item on my list here, PPP loan forgiveness. Each return is a little bit different. Hopefully, if you have a small business, you're dealing with a CPA. These PPP loan forgiveness amounts, they have to be reconciled on your tax return, right? Because you received the money. So your accountant or your CPA, whoever's working with you on your return, will help you reconcile that. But don't be confused by the fact that they may be asking, for those amounts when they're doing your tax return, because we do have to reconcile that, because you did receive, in essence, free money, and it has to be shored up within your tax return. Again, not taxable, just has to be reported to the IRS. And then Becky had asked Pam for me to cover one of the most popular credits, with COVID-19 as it relates to employers, is this FFCRA COVID pay employment tax credit. And what it involves is, as an employer, you can get up to 80 hours credit, COVID sick leave, or up to 12 weeks family and medical leave reimbursed by the IRS via filing your Form 941 tax return. Or you can apply for an advance credit. The credit currently is available until March 31st. So there's still time to take advantage of that. And this would be, for any wages that you paid due to COVID, up to $200 per day per employee for COVID sick leave, and then up to $511 wages per day for family and medical leave. So the 80 hours would typically be, someone who, got COVID and had to, isolate at home. They couldn't be at the business. And that's what we're seeing most of our business clients using. So what that is so they can pay up to the 80 hours, up to $200, per day. And there's a number of calculations related to that, but it's basically based on their average wage, what they currently make, whether it be, they be a part-time or a full-time person. And then for the family medical leave, it's up to $500 wage per day. And that would probably be more so related to salaried folks that you might have on your payroll. So, and with that, it's not mandated. It was mandated that you had to offer that up until and including December 31st. It's currently not mandated that you offer it, but we have a few of our business clients who are offering that. And the benefit to the employers, you can apply back, for the, employment taxes, the FICA Med, Social Security and Medicare on your 941 return. And there are special lines, for those credits to appear on your 941 return. If you use a payroll service, they should know exactly what to do and where to put those figures. And then what you can do, that credit can be refunded to you once you file your tax return, or it can be applied to a future quarter, which some folks might want to do if their business has had a hard time the first quarter, of 2021. That would be of a great benefit to them. And it is a dollar for dollar reduction. So whatever you pay out in those taxes, you're going to get back. We haven't had too many, actually none of our business clients apply for the advance credit. The advance credit, I feel you would wait as long to get that money, then I think it would be quicker and more efficient if you just filed for it on your first quarter 941 return. And then that way you wouldn't be waiting, you'll get the money sooner than later. The IRS is trying to figure all this stuff out. They are still millions and millions of tax returns behind for 2019 and processing anything to do with paper. So my feeling is if you want to take advantage of this credit, you should do it on the first quarter 941 return. And you have to keep meticulous records. If they come back and want to take a look at the folks that you offered this credit to and whether they met the criteria, it has to be COVID related. It can't just be because there has to be a legitimate COVID-19 reason. Let's see, Pam, do we have any questions before I go to the next slide?
Hi, we do not have any questions right now. Are there any questions that haven't come through yet? If not, we'll just go to the next slide and catch those at the end.
Okie doke.
Okay, thanks, Jeannie.
Yep. So for individuals, I wanted to cover a few things that you may or may not be aware of for this year, filing 2020 income taxes. Direct primary care and health share ministry plans were not previously allowed as insurance deductions on our 1040 returns. Starting this year, they are. Examples of some of those companies would be MediShare and Liberty. So if you participate in one of those types of plans for your health insurance, be sure to give your CPA that information so they can, throw that on your return and see if it'll help you, qualify. Currently you have to have in excess of 7.5% of medical expenses of your adjusted gross income in order to qualify, but this might throw you over, that limit and allow you to itemize versus the standard deduction. So that's something new this year. Cryptocurrency, I deal with quite a few clients who, for one reason or another, have found themselves in trouble with the IRS. And so I have a few agents that I deal with on a regular basis. And one of the things they're telling me is, be careful with cryptocurrency in that, we think of it as being digital and in the cloud, that sort of thing, but it is when you buy and sell crypto, it's no different than when you buy and sell stock. And some of the exchanges like the Robinhood one, they are sending out statements. Not all of the exchanges that you might operate on or buy and sell crypto on may give you a year-end tax statement. So it's on you, to make sure that you keep accurate records and report that. But the IRS is looking for those. They're nervous about it. It's something new. So just be aware if you have bought or sold cryptocurrency this year, you need to report that on your tax return. And then education and education expenses. One of the things that folks don't always realize is if you have a student in your household and you're claiming an education expense that when it says books and supplies are part of that tuition, laptops and software related to whatever their degree is, software relating to their degree is deductible. And what we typically do is if the student is a full-time student and they've purchased a laptop for the school year, we usually take something like 50% of it because they're spending at least that much time, in their studies. They need the laptop anymore. When you go to school, it's different. You used to carry books, now you carry a laptop. So it's a legitimate education expense. So if you have a student and you're not declaring, or if you, those sort of expenses, talk to your CPA or tax preparer about including those. And then also for this year, the IRA limit, 70.5 limit is removed, meaning it used to be that you could not contribute to an IRA once you had reached 70.5. That wage limit has been removed. So as long as you're earning wages, self-employment income, you are able to still contribute to an IRA beyond the age of 70.5. So take advantage of that if you can. And then RMDs, which are required minimum distributions. The required start date now for that is 72 instead of 70.5. So you can wait longer. We have many clients that in retirement are making more money than they did when they were working because they're collecting Social Security and pension. And so they go out and get part-time jobs. And when they get the part-time jobs, that then enables them to contribute to retirement again. So and that, like I said, that age has been changed. So take advantage of that if you can. COVID-19 retirement distributions, we're seeing a lot of that so far this year, that folks had to take out substantial amounts from their retirement accounts to stay current with their house payments, pay for school, whatever it might be. And this year, if you took a COVID IRA distribution, prior to 59.5, when you're normally able to take that penalty free, these distributions can be spread over 3 years. Meaning if you took 100 grand this year as a COVID distribution because you needed to, you have up to 3 years to spread that across your tax returns with substantial, then, as you can imagine, tax savings. And if you had the tax withheld, so using the example of 100,000, and let's say you had 20% withheld, you're not going to need that full $20,000 withholding, more than likely, to cover your tax liability for 2020. So you would have a nice refund coming back to help you as well through the rest of this year as, you know, we become hopefully COVID free. So keep that in mind. You have up to 3 years to spread that with no penalty whatsoever. You still have to pay the income tax, but there will be no penalty or interest related to that. Then stimulus checks. One of the things that we look at with each client who has dependents on their return, you know, child or, you know, a dependent on their return, is whether or not, if that child is making enough money, does it make sense to pull that child off the parent's return and let them file on their own? And the reason for that might be, you know, if the parents, you know, make, you know, upwards together, make up, you know, over 200,000, they're not going to get, not only are they not going to get the stimulus for themselves, but they aren't going to get them for their children. So if the child makes $15,000 to $20,000 and just happens to be still living at home, but it can be justified in that, you know, they're making enough money to justify them being independent. We're looking at that quite closely to see if that's possible, because as you know, the stimulus first round was, you know, what, 1,200, or for the kid it'd be 500 the first time, 600 the second. But if you pull them off as an adult and put them on their own return, it's $1,200 for the first stimulus check and $600 for the second. And so it's not too late. So if the parents didn't get the first stimulus for their children, and you pulled them off the parent return and have the kids file on their own for 2020, you can go back and claw back that stimulus money for them. So talk to your preparer about that. May or may not make sense for most people. Most of our kids, you know, don't make a lot of money while they're living at home, but take a look at it and see if it would benefit you. We've done that so far for half a dozen clients or so where it made sense. And then lastly, on this slide, cash contributions. I'm surprised to hear not many people still know that up to $300 cash contributions can be deducted on your individual tax return if you can't itemize. So a lot of folks, because the standard deduction is better for them in filing this year, they aren't able to take advantage of perhaps the substantial cash contributions that they make. So there's an above the line $300 cash contribution deduction available to you if you've donated up to $300 to 501c3s and that sort of 501c3s and nonprofits. Same thing, sorry. And then next year, keep in mind, so if you didn't take advantage of that in 2020 and 2021, that goes up to $600. And funnily enough, the state of Michigan hasn't caught up with the IRS yet. You may or may not know that cash contributions aren't deductible on a Michigan return, but so far, Michigan hasn't corrected, not an error exactly, I just don't think they've realized it yet. This $300 on the federal return is actually flowing through and giving credit on the Michigan return too. So if they don't correct that for this year, 2021, that'll be $600 tax deduction available to you on federal and Michigan. So keep that in mind and save your receipts. Not likely you would have to produce those, but you have to have spent the money in order to get you'll have to have the receipts in order to prove, that you gave the money away. I had a client recently ask me, they threw $100 in the Salvation Army kettle. Does that apply? Well, they don't give you receipts, as you know, but my experience with IRS agents is if you are traditionally a giver, and on your tax return, you consistently have charitable contributions, they'd probably give it the nod, but I wouldn't want you to be surprised if you got audited and that deduction wasn't allowed. So keep your receipts if you can. as a result of the weekend, or sorry, Pam, I'm going to stop for a moment. Do you have any questions on the individual side before I go to this slide here?
I don't have any questions yet in the Q&A in the chat, but
Okay.
during this presentation, a couple of comments have slid by from the left to the right, and I have never seen that before. So if somebody has written a question, it has not come through on the Q&A, so just write it, make sure you write it in that Q&A, because I don't know where it went, but it went sliding right. But anyway, okay. Thanks, Jeannie. I'm still here.
It's COVID. It's taking control.
Well, the computer has had a little COVID, that's for sure.
So as a result of this weekend, holy moly, there's a lot going on in Congress, and I wanted to highlight 3 items in particular, which might cause you to pause in filing your tax return. And so I'm going to go through those. I've got 3 of those. Unemployment income. So what they're proposing is that up to $10,200 in unemployment benefits would be non-taxable for individuals under 75,000 single, 75,000 AGI, and 150 if you're married. I think they're going to go with 112.5 for head of household, but I don't know that for a fact, but it's usually somewhere in the middle if you're a head of household. And you'll also be able to claim back any taxes that you had withheld from the unemployment. So if it remains to be seen whether the state of Michigan is going to follow suit. And what I mean by that is, so just because the IRS says it's not, the state unemployment is not going to be taxable, doesn't mean that Michigan or any state will follow suit. I'm assuming they will, just like, Michigan came on board recently and officially said that stimulus money, wouldn't be taxable, but we don't know until we know. And I know state of Michigan is hurting, right, with all the claims that have come through. So, and then we don't know by what method you would receive back those taxes that you had withheld from your unemployment. So a reason for holding off filing your return, might be if they pass this tomorrow, I think is the date, and they are very, very quick in, fixing the software, fixing the wording of the bill and getting, it's a lot more than people just voting. There's a lot that goes on after that before, we can actually submit this into a tax return. So that might be a reason for you to wait. If you've already filed, you're going to have to file an amended return to get that money back. But just, one more added bonus, but a wrench in filing your tax return, if you're planning on filing it on time, and or if you've already filed. And then the third stimulus check, up to what is being proposed is up to $1,400 per person to be issued based, again, on your 19 tax return. They keep going back to 19. I don't anticipate that will change in that, we've got a few clients, 100 or so that have filed already for 2020, maybe 150. And I'm assuming that's true in other tax offices. But it's unlikely that they could get, in my mind, they could get the bill passed, get the software adjusted, get get everything done so that they could base this third stimulus on a 2020 return. It's highly, highly unlikely. I think they're just going to try and start spitting these checks out as soon as possible once it's passed. So they're going to use your 19 return. And as with the prior 2 stimulus checks, the money isn't taxable, will not have to be repaid. If you inadvertently, if your 19 return shows that you qualified, but on your 2020 return, your income was too high, you will not have to pay that money back. So you don't have to worry about that. And I'm assuming too that the third stimulus checks, if you got direct deposit for your first and second, you'll get direct deposit for this one as well. If you owed in 19, you're probably going to have the same issue that you experienced with the first and second, in that they won't direct deposit it. You'll have to wait for a paper check, but you won't have to do anything special to get it. It'll come through just as the other one did, based on your, filing of your 19 return. And if you didn't file a 19 return, similar to the first and second stimulus, you're going to have to file a return or a recovery rebate form, to get that stimulus. It's not going to come, automatically. And that's another reason perhaps to, as we talked about with the unemployment, to consider having a child file on his own if his income warrants that. You wouldn't want to do that. You shouldn't, with a taxpayer who has a dependent and he's making, $5-6 grand working at Jimmy John's, that sort of thing. That's not the kind of dependent we're talking about. We're talking about someone that's making 15, 20, 25,000 a year, is getting student loan money maybe, and is living at home. Those are the kind of dependents we're talking about, pulling off and taking advantage of that. And then the expanded child tax credit. This one is a big one. Holy smokes. So for 1 year, under the proposed plan, families would receive $3,600 for each dependent child under the age of 6, and then $3,000 for each dependent child between the ages of 6 and 17. These monies, as the bill is currently written, would not affect the filing of your 2020 tax return, because funnily enough, it looks like what they're going to do is they're going to issue checks periodically during the year for this, which I don't quite understand how that would work, but this would not prevent you from filing your return. So again, until the bill is written, approved, and they've figured this part out, like I said, I'm not sure how that'll work, but it's a substantial increase, in the child tax credit. And again, for 1 year only. So this will only apply for 2020. And I didn't mention too, on the stimulus checks, first, second, and/or if we're talking about the third, if you missed out on the first or the second by filing your 2020 return, meaning if your income ends up to be lower and you didn't get the benefit, you'll get that on your 2021 return, which seems like a long way off, but you won't not get it. There's no way to get it other than on your tax return, but you may have to wait a while. So all is not lost. So don't worry if you missed out, you'll be able to take advantage of that. And let's see, last slide here, up until this weekend, I thought they weren't going to extend the deadline, but the chances of the IRS extending the filing deadline again, like last year in Michigan, I believe now is probably 100%. With all of this coming into fruition, there's no way that not only all the software providers, can get their ducks in a row, but the IRS can get the language and push that out. So you may be able to take that and use that to your advantage, wait to file, just wait for all of this to settle and filter through, to all of us. And if it makes sense, talk to your preparer. We've already got 15 returns that we're going to wait on, and make sure that we, can take full advantage of, especially the unemployment up to 10,200. That's huge for a lot of people. And considering they had taxes withheld, even huger, for us to wait and see if this thing gets passed, as it's presented. And that's it for me, Pam. If you have any questions for me, as always, I'd be happy to answer them.
We do have, I did write your contact information also in the chat box.
Oh, thank you.
But does anybody have any questions for Jeannie? Jeannie, wonderful presentation. As always, you are so knowledgeable.
Thank you.
You're gifted in this area and you've covered everything. So I'm really grateful for you. Does anybody have any questions for Jeannie?
I do. Jeannie, could you touch on the employee retention tax credit a little bit and any other business tax credits that may be out there and ones we're not hearing about maybe as often as some of the great ones you touched on in your presentation?
Yeah, sorry, Becky, I forgot to cover that when we were in the business section. The employee retention tax credit gives employers credits. I'm not as familiar with that as the COVID 80-hour and that credit, but it allows an employment tax credit, so Social Security and Medicare, up to $10,000 in wages. And that's just for keeping people on the payroll while, even through COVID, safely, of course. But and one of the confusing things about this that was clarified late in the year is that if you got PPP money, you could not qualify for this employee retention credit, on your business tax return. They clarified that late in the year in that, yes, you can apply and use that credit as long as you don't use your PPP loan money bucket. So if you got PPP loans and you used, that up, use that 24-week complement of PPP loans, you can still then, if you had another bucket of payroll money that wasn't covered by the PPP loan, you can use that to qualify and receive, the employee retention credit. Currently, we don't have any employers, business owners as clients that are taking advantage of that. But as the second round of PPP loan forgiveness is now being offered and shored up, it would be my expectation that they might then now take advantage of that, and that's huge. That's the only other big one that I can think of, Becky, as it relates to employees. The PPP, employee retention credit, and then this, FFCRA, the family leave, medical leave, and CARES Act leave. For those that have had COVID related, instances in their business where they were completely shuttered, like restaurants. That's a key one. Actually, there is for employees of restaurants, and I can get that information to Pam to offer up to anyone who's on the webinar. There's also a credit that the employee can apply for if they worked, for a restaurant. I haven't heard of anyone being successful in that. I know they've applied but have not gotten the money, and I can get more details on that, but that's available as well to employees of restaurants who were shuttered, and maybe they didn't get unemployment, or didn't get as much unemployment as they were making in wages and tips. So that's available as well. And again, I can get that information for you.
I'll take that information, Jeannie, and then I'll send it out to our restaurants as well, and they can pass it out to their employees.
Right. Okay.
Okay, any other questions or any final remarks, Jeannie?
I don't think so.
All right.
Good luck with tax season. There is a lot going on. And if you're, as I mentioned in the beginning, if you're searching for a new tax preparer, if you're new in business and have questions, we offer a 1-hour free complimentary session where we talk about what you're doing and where you want to go. During tax season, it's a little harder to do. So typically in another month, we'd be taking those appointments. But if you need any help whatsoever, we are always about answering questions. So even if you're not a client, if it's a simple question that we can answer, I would love to do that for you. So please reach out if you have any questions.
And I must attest to the fact that Jeannie is just a remarkable person in general. She's a Rotarian. She organizes all of the Thanksgiving dinners for through the Brighton Rotary. She's just of like wonderful character. So I know I can always call on Jeannie, and she's always there, and she always answers questions, and she's on our finance committee here at the chamber. So Jeannie, we love you. And Becky, we love you too. Thank you, Becky, for being such a tremendous supporter of the chamber, and thanks to Lake Trust for allowing you to be with us so often with our public policy committee.
Thank you, Becky.
Thank you, Pam, and thank you, Jeannie.
Okay, well, everybody have a great day. Thanks for tuning in, and we'll get this recording out, okay?
Thank you.
Okay.
Bye.
Bye.